We've finished up the first half of the trading year. Now it's off to the second 6 months of the 2013.
We have our crystal ball out. We have some experts here to look into it for us. With us today, our own Jeff Cox from CNBC.com. We have Ken Mahoney from Mahoney Asset Management. We also have Alan Nuckman from Trading Advantage and Kenny Polcari from O'Neill Securities, just finishing up his workday.
He promised. He came over and said, I'll be with you in a moment.
Very shortly.
He's rebalancing his Russell right now.
Exactly.
So let's start with Ken Mahoney. What are you expecting? I mean, what did you make of the first half of the year? What do you expect next year, half?
Yeah, I think the market looks in pretty good shape. I think we go higher yet. And I think the theme for this past week and for this month and for the quarter is that interest rates are on a rise, and so are anxieties. And investors were very anxious last week with the Fed tapering talk. And with that Fed tapering talk, we had a market sell-off. And it's amazing. We basically had a taper tantrum, so to speak. And it seems to be an overreaction because at the end of the day, the Fed has Fed fund rates at 0 and will keep them there for a foreseeable future. So to me, this taper tantrum is overdone. It's too much an overreaction.
Taper tantrum, I like that. Jeff Cox, every guest that we've had on has said, regardless of where the market goes, it's going to be volatile, it's going to be choppy, not just for the summer, but for the back half of the year too. What are some of the diamonds in the rough for investors here?
Well, Kayla, I think that's exactly the case. What we're going to be looking forward to. The market's going to be looking for direction through the course of the summer. One of the things that I just tripped over today was the hog trade. It's a very, very interesting commodities trade because we've seen a lot of damage in the commodities complex. We've actually seen live hog trade go up about 40% just since it bottomed out in late March. Part of it was the trade on that Smithfield deal, but I just think that this is sort of a theme going forward where investors are going to have to get very creative because I do think we're going to see very volatile markets. I do think you're seeing some value created out there from this taper tantrum, as our previous guest just talked about. I would say you want to capitalize on some of the panic that the Fed policy is going to engender in the markets. I like muni bonds. I think bonds in general are going to be very interesting trade going forward, and you're going to have to look for some value areas that have been sold off aggressively. Pick your spots carefully.
Yep. Alan Nuckman, one of the trends we saw here, especially in the last month, was the market flirting with various support levels and holding those levels. What does that tell you? Are you hopeful, or do you think we'll go below them?
I'm very encouraged. I think the fact that we're back above the 1590, that's been a pivot point in the S&P futures here for the last 3 months. So we'd gone below that, which is a double bottom. We're back above that once again. And that was also the breakout area back in April, if you remember, and it rallied up to 1650. So above that's very important. And if you look at this last bounce we've seen from these lows, we're 3.5% off these lows at 1550. And the halfway point of this last big sell-off is 1615. So yesterday's high was 1614.5, so we almost got through there. We need to see some follow-through. I'm very encouraged by the action we're getting with this dearth of earnings right now. There's nothing out there to drive the market fundamentally, but I think that's going to lower volatility and lower the anxiety once these start to roll in here in the next couple of weeks. And we see JP Morgan, we see Bank of America, we see Wells Fargo kind of drive the financials.
Yeah, I think
once
you get past those bank earnings, I think it's going to be a train wreck from there on. I think bank earnings are going to be very good, but from then on, it's not going to be a pretty picture.
Look who joins us. Look how relaxed he looks now that his Russell has been rebalanced.
There you go.
There's Kenny Polcari. How'd that work for you? How'd that go? A lot of selling.
You know what? But it worked extremely well, right? The technology worked fine. The volumes you see exploded on the bell because of the Russell rebalancing. So you see huge volumes trading. But quite honestly, I think everything at the moment has worked right to the T. So it was actually quite smooth. And it was great. I got a lot done at the end of the day. It was perfect.
Ken Mahoney, in the last hour of trading, in addition to that rebalancing, we also had those comments coming out from John Williams of the Fed, a reversal for him in April and June. He had said that he thought the Fed would start tapering in the summer. Now he's saying it's too soon to tell and that it could be a ways off. Do you think that sentiment is going to play into the markets from what you've seen, and what do you do with bonds from here?
Yeah, there's been a lot of talk about that. In fact, we've heard a lot of different Fed comments this week regarding what's going to happen with the Fed tapering. I think a lot of people have been missing this market, quite frankly, because they're worried about quantitative easing and the effect of inflation 2 and 3 or 4 years out. I keep reminding the investors, a little analogy that I give is that when you're driving a car at night and you have the headlights on, you look out 30 or 40 yards, down the road. You don't try to look, 2 years or 3 years down the road as an investor. So if you keep it short, you're looking at a Fed that's very accommodative, and those comments, continue to add to that. So I think we're in really good shape. And again, I wouldn't get caught up in worrying about inflation 2, 3, 4 years down the road. I would look at what's in front of us right here.
Kenny Polcari, what are you expecting now that we get this sort of maneuver out of the way here? We can focus maybe on the fundamentals again. What do you?
Well,
what do you
I think yes, you're going to start to focus on the fundamentals next week when you start to get the earnings reports coming out, as you guys were talking about before I joined you. But the fact is, now that it's really kind of everyone feels comfortable again that the Fed's not going anywhere. The tapering's not going to start in September, as everyone kind of feared, and so therefore everyone knows you've got this floor underneath. And so, quite honestly, I think the market is going to run into a little bit of volatility, but it's going to churn here. It's not going to get a chance to really back off, and if anything, people are going to feel comfortable once again, and the market, I suspect, is going to start to move higher as we go into the fall. I think the summer could just be kind of choppy, right, all summer.
We've been asking all of our guests what their single best investment idea for the back half of 2013 is. Alan Nuckman, where are you putting your money to work? What's your single trade?
Well, I had mentioned the financials. They've had a nice sell-off, a 10% sell-off. I think over the long run, you could easily see the XLF get up to 26. And we're still significantly off where we were, obviously, in 2008. Banks are making money, and actually they can make more money when interest rates go up. I think the interest rate issue right now is a non-issue because we went from ultra, super, all-time forever lows. And yes, we bounced up, but it's not a catastrophic situation. And actually, all that money that came out of the bond market is going to have to go to work. I look for it to go to work back in the stock market where it can get a good yield.
All right. Thank you, gentlemen. Good to see you all. Appreciate your thoughts.
Thank you.
Yes, sir.
See you later. So the first half.